Good morning, folks, and welcome to the Pre-Market Insight for January 15th, 2019. Boy, oh boy, do we have some interesting developments. Let's get straight to it. So we're looking at a chart of the S&P 500 futures, and just to have a quick recap here, we can see we made a new high in the overnight session of 32.96 last evening. We came into the morning session yesterday, of course, with very high hopes of touching this round 3300 number. And recall, I gave that as an initial target and suspected that we may actually get a tap of it and a rejection. So said, so done. We came up, we made a high of 32.9675, about 3 points away from that target. And we sold off on some negative news headlines that broke all the way down to 32.75, which is a level that we must carry forward as sort of a line in the sand for continued momentum in the short term. As it stands right now, we're simply bouncing around within that range between 32.75 and 32.95. We are just about 2 points off of the low, two points off of the high of the pre-market session. And so we're coming in with a bit of optimism once more. What are our guideposts for today? Well, yesterday's low at 32.75, which is quite a ways off. But as we said yesterday in the market video, the ranges are becoming more expansive. Volatility is actually picking up in terms of the intraday movement and the ranges that we're experiencing. And so whilst 20 points some time ago might actually have been a bit of a move, we actually fell 20 points in the blink of an eye yesterday on that news release. So this is definitely a time for active traders in particular to be very tight on stops, to be very nimble as we are experiencing a bit of consolidation as we approach this round number 3300. Are we going to break out to continue making this sort of upward onslaught and advance, or are we going to build value, allow sellers, as many sellers as possible, to get out at these higher prices before we are taken lower, back to revisit lower levels 32.52, 32.34, 32.15, 31.81. Keep it simple, smarty. As I mentioned before, as both a long and a short, I am becoming a lot more tactical. So any weakness on longs, I am selling, as I anticipate there is going to be rotation that is keeping this market higher. So as certain sectors become out of favor, I trim weakness, I sell into strength, and I'm getting a lot more tactical in terms of reducing the number of open positions I have, reducing the position sizes that I have as risk capital open to the market's whim and fancy. There is no need at this point to be heavily positioned, especially when we're at an inflection point. Do we break higher at 32.96, or can we easily see 32.52 once more, simply as a washing out of weak hands before the market continues its advance? Don't get caught with your pants down. Don't get caught unawares. Be aware of your risk management, and your money management, especially as we are now just past the halfway mark in January. Let's consolidate what we've done thus far, continue executing on the good things, and continue moving steadily away from those things that may have hampered us in 2019. Keep it simple, smarty. Be safe out there today, guys.